The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 29th Turnaround Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, we're going to go take a look at the circumstances of the bulls and the bears, the buyers and the sellers. We're going to go try to figure out what it is that they are communicating to you and I, and I'm absolutely grateful for your presence here. Now, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Internationally, 727-445-1044. You can send me an email, steve@tfn.com. I'll do my best to keep looking at that screen and pick up on those. Of course, inside the Tiger's Den, love to hear from our tigers and tigresses. Go ahead and post a question there, and I'll be happy to get it for you. This is terrific and Turnaround Tuesday, usually. Let's go see if today's going to be it. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 11 points, so we've got a flat market out here. The S&P is up 1 point. That's trading at 1882. NASDAQ Composite down 8. Russell 2000 off 4 points. The DAX closed off 33 points. It closed at 94.50. The DAX, the FTSE closed down to 49 points. The gold is trading down $2. Silver's up 6 pennies. Light sweet crude is up 92 cents out there. Leading the charge to the upside, we've got Phoenix Companies. That's up 19%. That's up 151%. Must be a buyout. IHS Inc. Not familiar with them, but they're up 7%, $7.55. Biogen, BIIB, that's up $7. Illumina up $5. United Therapeutics up 5. Herbalife up $3. To the downside, Esperion Therapeutics down $14. Ooh, that's off 40%. Intuitive Surgical down 2%, $9. Team, TISI is the ticker symbol, though. They're down 21%. That's off $8 out there. AutoZone down 7. Priceline off 6. So where do we begin? I'm actually going to begin. Let's first take a look at one of the bull's friend, it's the bull and the bear's friend, just depends on which way it's trading. But let's go take a look at the currency pairs. Let's go take a look at the euro, Japanese yen out here. Now, over the last couple of days, well, certainly yesterday, we saw quite a sell-off in the market. Just was nonstop. And what was certainly unusual about that was that there was no confirming signal inside the euro, Japanese yen. And that is really the same thing that is going on. Yesterday when you and I spoke, we took a look at a couple of different parameters. We took a look at the end-of-day trend index, right? We said if that was above 2 at the end of the day, and we took a look at a one-day rate of change in the VIX index above 10%. What we said was if we see that, to anticipate, to expect, to have a 90% probability of a bounce, and a good bounce. And that's what we had that took place between the overnight session and earlier this morning, late in the morning. We saw 1.5% move from the low to the high inside at least the ES Mini. I'm sure it was around 1.5% or more inside the other indices from low to high as well out there. So that bounce that was to be anticipated, that's out of the way. Now the role for you and I today is to try to go figure out, what is the additional messages of the market. If the euro, Japanese yen were creaming to the downside, or even at least testing support, which, by the way, is the bottom of this candle here from May 26, red horizontal line, we can see it's not anywhere near busting out its descending trend line. And that's the one that's going from upper left to lower right towards the top of my screen out there. Long way to go before it gets to resistance, but the currency pair has not fallen apart. So that does make us have to say, something to think about. You know what we should always do, remember, whenever we're flying out there, it's always good to take a look above and below you. That means from a chart pattern perspective. If you're looking at a daily chart, make sure you look at a weekly or a monthly. Let's just switch over and take a look at the long-term monthly chart out here for this currency pair. Because to the extent that it's going to continue to be the carry trade, and I see no reason for it not to be, and we take a look at some of those long-term patterns out here. Well, I think I have the monthly out. What's that red line? What the heck is that? Oh, there we go. Okay. So as we take a look at this currency pair, it takes us back to 1980. Just took my system a little bit of time to get back to that 1980 level. So as we take a look at it, and by the way, 1980, this currency pair was priced out at 285.56 or 134.84. And you can see that little trend line. We saw price just slightly break above it right back here in November 2014. It's really been trading in, if we pull this, so we explode this up now a bit, really been playing in quite a narrow trading range out here. So, you know, to the extent that even if it can move higher, it's going to run into resistance around the 140 level out there. But we want to pay attention to, because look, if this thing were headed south or headed south in a big way, I would absolutely have to say you got to look out below. And I'd say you have to look out below because we've got a VIX index, right? That's above the 50-day exponential moving average, priced out at 27.29. It closed at 27.63 yesterday, so it's pulled back just slightly. We don't have to necessarily worry too much about what the VIX index is doing, other than you need to pay attention to where it's at in relationship to its 50-day exponential moving average. The reality is there is plenty of fear, or what I would refer to as a lack of liquidity whenever the VIX index is trading above that 50-day line. And when you have lack of liquidity, you have prices that move to the downside. So there's no message here inside the VIX index that tells us that the market wants to move higher, at least not just yet. And with regard to comparing yesterday to the day, we're relatively neutral with regard to it. So we've got that as a tool. We've got our currency pair as one of our tools out there. Now, as long as I'm in the currency pairs out here, let me just simply go ahead and take a look at the other currencies. You can see it's just slightly green on my screen right now, the euro, Japanese yen. So I do believe that is providing you and I with a message here. Let's go take a look at the euro just versus the U.S. dollar. Let's go take a look at it. Let's stay on these long-term charts out here as well. You can see on the shorter-term chart, it also shows up here. You've got a little rising price channel. We can also see, in the case of the euro, from its high back here in July of 2008 down to the low that was put in, from the low of October in 2000 to the highs out here in July of 2008, we're trading really right around the we're trading right around the 0.618 retracement level. I promise you I'll get these numbers right and try not to confuse you. You know, the 0.618 retracement is a natural retracement, right? You just take a look at this chart. You take a look at our charts, the Dow, the S&P, and so forth. You know, people talk about you get a 10%, sell-off from the highs, you're in correction territory. All I've got to say, where in the heck does that come from? You and I take a look at 0.618, 0.786 retracements all the time as just simply being nothing more than normal moves in this case here, in a bull run. Now, we did see the euro versus the U.S. dollar index get below that 0.618, and it looked like it was going to get down to below par, 98.98961. I'm not sure if that's the case, if that's what it's going to do or not at this stage of the game. In fact, what we know right now, it's just trading in this gradual rising price channel. So, with regard to the euro versus the U.S. dollar, is this going to impact any of our trading decisions right now? It'll impact the U.S. dollar index, but until it breaks out its low out here, I'd have to say it's going to travel just simply with inside this trend channel out here, this rising trend channel. That's what's going on with that currency pair. We might as well stay out here. Let's just take a look at the Japanese yen itself versus the U.S. dollar index. Let's take a look at a longer term, then we'll come back and take a look at the daily, see what it's doing. If you take a look at this currency pair, now this is not against the euro, this is against the U.S. dollar, you can see what one heck of a rising trend channel, price channel out here. 118 is a fairly decent level of support. It could actually even pull back a bit below that. But until it breaks through, meaning closes below this rising price channel, it wants higher price. And if we just simply take a look at the swing point out here from 1998, and go down to the lows out here in 2011, you're trading really also right at the 0.618 retracement level. So if it can hold this rising price channel over the long haul, the Japanese yen wants to head up to the 132.34 level. And that is its message out there. Great British pound. Let's just go ahead and finish off the currency pairs out here. As long as we're in currency land, here's the daily. But let's look at the monthly chart. Gives us a better view as to what's going on. What we can see out here is just simply sideways action. Now, this is sideways action inside of this currency pair that's been in place since 2009, $1.70. Versus about $1.45 down at the lows back here in May of 2010. We also saw those lows. We saw that level get hit back in April of 2015. If it breaks below 145, then you'd see price head all the way back down and test those lows from 2009. But just simply a consolidation pattern that it is trading within. But it's really about that Euro-Japanese yen that is making me ponder, or should make you ponder as well. What is the outcome over the next couple of days or longer of what the market is trying to communicate to you and I? So now let's go from these monthly charts, these daily charts, and let's go squash it down to 10-minute charts out here. Let's go take a look at the S&P futures out here. Let's go take a look at the ES Mini and see what they've done. Now, it came very close to making an A to B equals CD to the upside. Let me see if the NQ actually made the A to B equals CD pattern out here. Yeah, it did. So you've got your first, and what I really mean by that, that's pretty easy for it to have occurred out here. Your A point was down here at about 2:30 this morning. Your B point out here was at 4:40 this morning, and your C point was down at about 9:50. You can see it made more than a 1-to-1 A to B equals CD. Almost got to the 1-to-1.272 A to B equals CD. Why is that important? Well, it's important because if in fact, because that A to B equals CD pattern, if we take a look at retracements here, let's look at a retracement. This is now on a 10-minute chart. We're actually taking a look at the NQ, so the NASDAQ futures, which makes sense for us to look at anyways. If we go from, it's a natural swing point, a little bit of a base that was forming out here, we take the swing point high at about 9 o'clock in the morning. That was yesterday, September 28th, down to the low overnight out here at about 2:30 in the morning. You can see it also made a 0.618 retracement. So in essence, that was a Gartley sell pattern. That's what a Gartley pattern is. You've got an A to B equals CD and an extended move in the opposite direction, and that's a point, and that's a place to sell. And that's exactly the pattern that actually unfolded here. But the real question is going to be, is this going to continue to form A to B equals CD patterns to the upside? That's how you and I will know for sure whether or not there's actually more to this bounce that is underway, or if this was nothing more than just a little bit of a relief rally. It's like getting a prick in your finger, if you're cleaning something, a little sliver, and you've got to pull it out, and then all of a sudden it feels better again. If we see, in fact, the highs that took place out here, again, it's only a 10-minute chart, but it'll provide you and I with a really decent feel as to what's going on. If, in fact, we see the high from about 10:30 this morning, that's at 41.44 and a quarter. That's the number you want to watch. We may have A to B equals CD patterns on the way up. That'll be the first signal for you and I. Maybe that's the message of that with the Euro-Japanese yen. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Dow's up 29, S&P's up 6, Composite's up 8 points right now. So we've gone from taking a look at monthly charts. Of course, that was on the currency pairs. But it really is important for us to get our heads wrapped around, understand exactly what the message of the currency pairs are. Without doing that, we're doing ourselves a disservice, and we would never do that for each other. We're here to cover each other's back. So let's go. And then we went to the 10-minute charts, right? Because the 10-minute charts actually are cool, at least right now, because we can take a look at, hey, what happened when the market moved up this morning? What was it doing? We took a look at what has, in essence, been one of the weakest indices on the way down, or the leader on the way down, the NQ. And then we said, oh, geez, well, that's natural. It was making a Gartley buy pattern in a market where there's been plenty of selling out there. So now the question, though, is going to be, are we going to see some A to B equals CD patterns to the upside? That means we've got to get above, or the market's got to get above this morning's high in order to prove that. Now, whether that doesn't have to do it between now and 2, doesn't have to do it between now and 4. It just has to do it before it makes a lower low out there. Otherwise, the pattern that has been in play is the same pattern that's in play. In other words, what you and I are trying to do is understand whether or not we can see a tide changing out here. Now, there's something else that you and I can look at, so let's go do that. I only bring to you the best of the best out here, and let's take. This is taking a look at the futures contracts. Now, the reason why I spend so much time with you on the futures contracts is simply because, from a pattern and set of tools information, it is way better at providing information for you and I than simply going and taking a look at the ETF structures, which we will do. But there just simply is no synergy there. There is synergy here when we take a look look at what's going on in the futures contracts, whether we're taking a look at A to B equals CD patterns, whether we're looking at wave counts, whether we're taking a look at TAS market profiles, the whole kit and caboodle. So what you and I are now looking at, we've gone up to a 120-minute time frame chart. And as we take a look at the NQ out here, let me just simply explode this up on my screen. Let me try to explode. Let me see if I can do a better job. That didn't work. Okay, there we go. Now that's going to work. Okay. Now I'm exploding it. So we're just taking a look at this last bit of data out here. Let me widen it a tad. And what we can see, we take a look at these profiles. I don't have them colored, So when you take a look at these three horizontal lines, the top is going to be the top of the box. The center is the center, and the bottom is obviously the bottom. Wow. Did I go to college to be able to communicate that to you or what? Holy cow out there. And you can just look at my, you can just simply you got to be able to laugh at yourself, don't you? You actually got to listen to yourself. But in any event, you can take a look at the little box out here, the data box. So it tells you where the top, center, and bottom. But what I want to show you, when we take a look at those lines, what you should notice here is that, listen, like at this stage here, the bottom of the box is held as support on the 2-hour chart out there. It's been pierced, but the body of the candle is the essence of price. That's really what I want you to focus on. The second thing that I want you to focus on, it's really not from the NQ that you and I are going to be able to get the largest amount of information. Look, if it takes out those highs that you and I looked at, though, right, this morning on the 10-minute chart, what this is going to help us with is just taking out that high is not going to be good enough. No, you want me on that wall. Well, that wall inside the NQ says that you need to see on that 10-minute chart, you need to see on this 120-minute chart, it clearing the top of the box. So the number that I gave you, just simply shred that and throw that out. Because what the NQ must do, if this is more than just a little bit of a relief rally, is it must close above 41.50. If it closes above 41.50, holds at 41.50 level, that's going to communicate a lot to you and I as to what's going to likely take place tomorrow, maybe the next day, and who knows after that. But we're going to take this one step at a time. So I want to make sure that I'm always providing you with excellent information. And so just clearing that top, which was, by the way, 41.44, that's what I said. We got to say, hey, wait a minute, you know what? We went ahead to another level. We took it to another level, folks. We got to get the Eagles out there. So when I say that, boom, we can put that on and, comes right up on. But in taking it to another level, what the NQ really must do, am I having too much fun or what? The NQ must close above the top of that box. Now, this box here, we really have equal distribution, so it doesn't tell us a whole heck of a lot out here. However, the box on here, as we take a look at boxes, our TAS market profiles, there's really one box, in my opinion, that tells us more than any other box out here. If you take a look at the ES Mini, that's on the right-hand side, that box simply tells us that we're at strong support. So as long as the ES Mini is able to close on these 120-minute time frame charts, the body of the candle continues to close above 1874.31. It suggests that the ES Mini ought to run up to a high of 1878.50. But that's not the box that tells us the most. I think the box that tells you and I the most is the Dow. It's the Dow box out here. Because if the Dow can close above, the number is going to be, in the futures contract, 15,929. That'll be a really important message. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 36, S&P's up 6 points. Gold's starting to move just a tad down $5. Remind me, you probably don't have to remind me, but we'll take a look at that. I do want to go back and finish that thought. I don't want to leave anybody hanging out there. When we take a look at these TAS market profiles, they're great tools, great additional tools to add to your trading arsenal out there. Because what it does is it helps you and I understand where these important battles are. For example, like in the NQ, we might have thought that, hey, just piercing above, this morning's high would have been a bullish sign out here. We now know that it's got to not just pierce it, it's got to take out that high of the box on the 120-minute time frame. But even if that happens, to me, that's not really the important message. The important or more important message, because not that one won't be, but the more important message is going to be what happens in the Dow. Because you see in the Dow, one of the things that you and I were doing, I'm going to try to widen this box here. When we take, maybe that's a little bit too wide. We take a look at it, take a look at the center of the box, the point of control versus the top versus the bottom. You can see that the point of control is much closer to the top of the box out there. So that says that the sellers are lined up right in between this range here. That range, by the way, is between 15,989 and 16,027. It's that 16,027 27 number. That will be key. You see, when we go back, we take a look at all four profiles out here. If the market is truly going to get more than just some small counter trend rally, but look, to get up to 16,027, folks, you're trading right now at 15,937, 935. That's a pretty decent move out there. That's another 78. That's another 100 points inside of the Dow. So, you get up to 150 points today inside the Dow cash, you're going to be able to get above that level out there that we're taking a look at. So I think that's really the element to be able to identify what the market is actually doing and what the next move is likely to be out there. Okay, so hopefully that assists you with your trading and investing. Now let's go back and take a look at. Let's not switch over and take a look at gold just yet, because it is September 29th. And if we go and that's really important. Tomorrow's even more important than that. But if we go take a look at what's really going on longer term basis, I want to take a look at our index trends out here, and I want to really focus on the New York Stock Exchange. So that's what we're going to do. We're going to take a look at it. Now, what we can see is right now you're trading at 96.28. You're really close to closing below the rising trend line off of March of 2009. So if the market gets any decent bounce today and tomorrow, what you and I will know is that prices come back to a trend line. Now, this is where it really starts to get confusing, even for me out here. So you really got to keep your head focused on the different signals. I write them all down on a spreadsheet, so I know what it is that I'm looking at, which one has more of an overriding factor. Like, I do believe, in all sincerity, the element that's going to make the biggest impact on you and I with regard to what the markets are going to do, and I'm talking going out 6, 7, 8 months from now, it's going to be these trend lines. And that's why it's really important. So if, in fact, however, these trend lines, if they can hold, you would teach your children to buy at trend lines and sell at resistance. When price moves below trend line, comes back, tries to get inside it and gets rejected. So right now, New York Stock Exchange, it's trading in essence right on it, just slightly below. The next couple of days are going to be really important for it. Same thing when we take a look at the Russell 2000, because in the case of the Russell 2000, it has not broken below its rising trend line off of the March 09 levels. But what it is doing right now, and it looks like it is going to do, is it's actually broken a trend. And that's a trend line coming off of the tops out here, the top or the high of 2007. We can see that level is held even on the retest back in October of 2014. The Russell 2000 is going to have to run like the dickens to the upside to get back above that trend line. So what does that say to me? It says that we've got a signal that the Russell's going to come all the way down to the rising trend line out here. So the Dow also important, right? Then we took a look at the futures out here, and we take a look at the Dow for the month of September. So tomorrow's close is really important. You can see at this stage of the game, it's trading well below, really both of its trend lines, just like the Russell broke below the trend line coming off of the 2007 high, off of the tops. You can see we're trading well below that. I do not anticipate or expect, look, the market's going to do what it's going to do. I don't anticipate that the market's going to get back above that level. And if we close out, and all price does at the, today and tomorrow, is it tries to get up into that trend and it fails out there, it's going to be a real important signal because of what has happened in the past. And until price were to get back above that, what you and I should anticipate and expect that you're looking at months and months of eventual lower prices out there. And but if price breaks back above that, then you and I are going to be willing to change your mind. So the cool thing is we can turn out all the other noise out there because we know what it is that we're focused on, what it is that we're watching out here. Just some simple tools. If we take a look at what's gone on across the world out here, because it is a one world market. If you take a look at the Nikkei, let's look at the Nikkei and see what it's done. It's let's do two things when we take a look at the Nikkei. Number one, you can see the Nikkei is really trading right on that trend line out here. And we took a look at the Japanese yen, which looks to me like versus the U.S. dollar, it wants to move higher. And as that moves higher, so too should the Nikkei. So it's really going to be, that's why you and I wanted to go take a look at currency pairs out there, because we wanted to get our mind wrapped around, hey, what's going on inside that currency pair? It has not broken down to the downside. It's not really testing the bottom of its trend line or its channel line out here. And what it's done, it's actually come back to where we've got a gap. You know, you take a look at this monthly chart out here inside the Nikkei. Do you see any gaps out here in the monthly chart of the Nikkei? And the answer is going to be, yeah, you see one gap. That's it. You see, let me see, is there any other gaps out here? And the answer is no. Now, I specifically remember this day because I had driven, this was on, it was almost a year ago. It was not almost a year ago. It was 11 months ago because it happened on October 31st. It was when the Japanese finance minister said, hey, we're going to take our money out of the pension funds and we're going to be able to go ahead and invest those wherever we want to worldwide out there. I'm not so sure how that's actually worked for them. But look, what it did do is it created a gap. So as we take a look at these gaps out here, what am I looking for? You've got some potential support right here. So it looks like what the Nikkei is doing, and the key level now for us to be watching inside the Nikkei is going to be the 16,413 to 16,713 range. So you can see here was the month of October. Here is November. Out here we had that gap up. Yeah, it was Halloween, Bank of Japan out there. So that's going to be a really key level to watch because you've got this long-term trend line out here that's under attack. I know I'd heard Tom, he had the volume. I heard him in either the update or something else this morning that was in the background. And he had the volume and said it was last night. It just, you know, if you take a look at the daily chart, which we'll do, let me just put that up on my screen here for you. The daily chart of the Nikkei. You know, if you hadn't remembered, which I know you did. But if you hadn't remembered that last Halloween, that's when the Bank of Japan said, hey, liquidity around the world, because it did gap down with some volume here this morning. Got a gap last night. You know, it's really going to be this 15,701, 16,533 area that we're going to want to watch to see whether or not price gets below that. You get below that, plus the trend line, and that does spell curtains for the Nikkei out there. But if we go back and take a look at our longer-term charts out here, our monthly charts for the other world indices out here, you got the FTSE. You know, that thing is cracked. It's so far below its trend line out there. There's no way that thing is getting back. So that's in a heap of trouble. You've got the DAX, you know, and it gets beaten up by a lot of the people in the press out here. But the reality is, with regard to trend lines, it's got so far to fall. In fact, it'll come back to the highs out here. It's consolidation. It's 2000 high. It's 2007 high, which it broke out of. It'll fall back to that level, which is 81.36, before it actually gets down to its rising trend line from the March 09 levels. Right now, it's really just up against a shorter-term trend line. That's off of the 2011 low, the 2014 low in October, and that's really where it's trading at as we speak right now. But if it closes below that, what you can expect and anticipate is move down to 81.36, and if it breaks below that, then the rising trend line out here. So the DAX actually, even though it's well off of its highs, as I take a look at it compared to other indices, it's really not too bad out there. But it's all relative, right? The Hang Seng in a heap of trouble. Clearly, unless there's, you know, some huge move overnight, I don't anticipate that. It has broken below that rising trend line out here. And every time it's done that in the past, it's led to, you know, much lower price out there. And we're not going to spend time trying to figure out where it's headed to at this stage. The NDX, you can see the NDX is nowhere near breaking its trend line out here. That would be right around the 3750-ish type level. So hopefully that assists you. You know, it is important for us to spend a little bit of time every now and then to take a look at what's going on inside the world market. So speaking of world markets out there, I didn't hear maybe you heard the Carl Icahn deal, you know, his video. I didn't hear anything of it, but I did hear some of the guys talking about it, or gals speaking about it on CNBC earlier, and they were, and so if I may be mistaken here, but it's my understanding from what I heard that what Carl Icahn said was the reason that he's taken and increased, he's pressed his stake in FCX, that the reason that he did it was because of copper. out here. And so you and I, we've taken a look at this chart plenty of times. You know that my presumption is that when you trade FCX, you're trading the Aussie dollar. And that's why it's really important to go take a look at what in the heck the Aussie dollar is doing. Now, the top portion of my chart is the Australian dollar. The center portion is Freeport-McMoRan. I've gone ahead and added high-grade copper. Because, look, I know that the most important thing that I can do is always God gave me 2 ears and 1 mouth. And he did that for one specific reason, to listen twice as hard, right? To listen twice as hard. So I'm always listening. I've always got my ear to the ground because, you know, what I know is people know way more than I do. But I always like to take what people know and see if there's any value in it, because sometimes, you know, it's for some other reason. But look, I wanted to go take a look at high-grade copper and take a look at Freeport-McMoRan. And if you took a look at these charts, if you're watching us on TigerTV, you're going to see, for the most part, a really good dance step between them all. So we also know that in the case of high-grade copper, I don't know why it's working out like this, but, you know, we typically take a look at high-grade copper, right? And we go ahead and take a look at it priced in dollars, which it is priced in dollars here right now, but it certainly is tracking along the Australian dollar out there. Now, there are times where it gets off track. If you take a look at Freeport-McMoRan back here in 2013, it actually went ahead and made a higher high back into July of 2014, just as the Australian dollar was doing, where copper was in the opposite direction. So it's not a exact tango step out here, but it's really pretty darn close. I mean, you take a look at, you know, different highs. If you take a look at my cursor, you're going to see a high in the Australian dollar, a high in Freeport-McMoRan, a high in high-grade copper as well. Now, what's kind of interesting about that is, let me go back over here. So let's take a look at 2 things. So in order for, and he said it's a long-term trade. So that's cool. You want to take a look at a long-term trade. If you want to trade along with Carl on this deal here, I'm going to give you some tools to be, because you don't have to necessarily buy now, or let's go find out if there's a reason to actually buy now. And if we do, so those reasons would be, first, let's just simply go take a look at the current contract for high-grade copper. It's trading out at 2 1/4. And let's say that you and I actually believe that Andy Heck is right. And because Andy says, hey, copper, at least I believe the last thing that he said, the last thing that I heard that he said was, hey, copper's going to $2. And you're 2 1/4 right now. So if and what high-grade copper did do, though, what is interesting here is if we take a look at the current contract, it broke a descending price channel or trend line out here. Price channel as well. I've just got the trend line. That's the red arrow going down from upper left to lower right out here. And it went ahead and did what? It made a Gartley sell pattern, right? It made a 1-to-1 A to B. Well, it's made a 1-to-1.272 A to B equals CD off of the bottom. I mean, it made it really to the tick out here. 249 was the number. It got to 249. 2.493 out here. So hit is the number. Nice big old bearish engulfing candle on September 18th. It's a daily chart, and it has pulled all the way back into that swing point of August 24th. So it's trading inside the August 24th swing point. Let me get rid of the A to B equals C. We don't need that out here anymore. And at this stage here, what high-grade copper is telling both you and I, it's going to go down at least test 220. And if it breaks 220, I will say that Andy's absolutely right. This thing is going lower. And again, and I don't know if his target is exactly $2, but it's going lower. And so if it's going lower, no time to be buying Freeport-McMoRan, knowing the dance step that it does. Now, that's just taking a look at high-grade copper out here. You and I think we did this yesterday or Friday, but we're going to go ahead and do it again because I want to pull this all together for you. And that's take a look at the Australian dollar out here because you've got to put the 2 of those together. Oh, let me do this in 10 seconds. Can I do it in 10 seconds? Oh, my God, the chart's gone. You got to be kidding me. That window's blank. The answer is no, I can't do it in 10 seconds. I'll build it. And we'll take a look at it when we get back from this break. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Break we were taking, I was going to try to take a look at the Australian dollar with you. Again, let me put this because I'm going to teach you how you can, if you want to go ahead and join the tailgate party that Carl is in FCX. I'm going to teach you something that he's got to know, but I'm going to share this with you because they're not sharing this with you anyplace else. And that is, we took a look at the correlation. So you see an absolute correlation between high-grade copper, FCX, the Australian dollar out there. Maybe you know of another correlation, send me an email. We'll go ahead and put it up on the screen, see if we can learn from it. And if we take a look at the monthly chart here for the Australian dollar, you and I were taking a look at trend lines earlier on those longer-term charts out there. And it looks like we're going to end the month in the Australian dollar breaking that rising trend line. Now, that's the rising trend line that comes off of the 2001 low, touches the bottom of the 2008 low, and you are also just slightly below the 0.786. So the key number to be watching here is 0.709. Now, just because you close below it at this stage here, you know, it's really going to be dependent. What you want to watch is you want to watch that line. You want to watch that level. You want to watch 0.7094, because if we see any kind of move with conviction in the daily chart above that level, that's going to be your signal, the time to go ahead and start stepping into an FCX trade if you would like out here. Otherwise, what you want to do is you want to wait for the Australian dollar to get down to 60 cents out here. So that's what you want. And if we take a look at the daily chart out here, the daily chart shows us right now that price is trading all the way back into its most recent swing point low, which was September the 4th out here. So we're not seeing, even on a daily chart, we're not showing anything that suggests that the Australian dollar is done moving to the downside out here. I did have a request to go take a look at the Russell 2000, the IWM. Let's pull that up on our screen out here now. The Russell 2000. A weak link out here, closed below its August 24th swing point low. That price point is 110.54. Volume on that day was 83 million shares. The day before, 59 million shares. And you closed below it yesterday with 56 million shares. So you closed below it with light volume, but you are still trading, not you, but the IWM is still trading below 108.26. That is not a good thing. This was for somebody that is inside the TNA, and they need to see it close above 108.26. If the IWM does not close above 108.26, where it is likely headed to, and I can't tell you whether it's to the top or the bottom, is the swing point from October 15th, 2014, those October lows, and that's between 103.54 and 107. Now, the volume on that trading session was 117 million. So you're also coming in there light. Ideally, I suppose, is that it gets down and it tags 107, closes back above it, does on less than 117 million shares, and then you've got a bounce that would be underway. But Nick, in the case of the IWM, where's that bounce going to take us to? To be quite honest, I would be watching the other futures contracts. They probably give us a better signal as to where a bounce could take us to. You can take a look at trend lines, most certainly inside the IWM. If you were going to draw a trend line in it, it would look perhaps something like this coming off of the highs out here in June of 2015. Looks like it didn't actually have the tool on it, and probably somewhere right around there is your trend line where it could bounce to. So that's a heck of a bounce if it could actually get back up there. It doesn't look like it's going to take out those September 17th high anytime soon. So, folks, thanks so much for being here today. Stay tuned. Our man David White is up next. And after David, because it is Terrific Tuesday, Turnaround Tuesday as well, we've got our man, we got Tom O'Brien from 3 to 5 and Andy Heck, who will bring it on home. Have a great Tuesday, folks. Look forward to seeing you on wonderful Wednesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.